Welcome back to my YouTube channel, or should I say the Underdogs channel, the underground. Smaller YouTube channels you could see, but you know what? The subscribers that I got, they see value, and that's what matters. All right, SoFi. Let's talk about it. All right. Past videos that I've put out on SoFi, I've talked about my investment thesis and why I think that they're going to grow to be a big bank. I've talked about some other operational investment liquidity, operational dynamics of in and out flows of and some of the surrounding things. So past videos, if you look back on those, but I've never gotten into the quantitative aspect of it, the numbers, if you will. Um, in this video, I'm gonna pretty much put out my price targets, how I got there, and so forth. So if you see value in this video, consider liking and subscribing for more content. All right, so SoFi, I got their financial statement pulled up. Um, and we're going to get right into the price targets and pretty much how I get there and what I'm using and so forth. All right. So, so the bear case, we got the bear case price target. You see that this is pretty much a blank template, right? That's right. All right. So, in the bear case is in the end of 2028, we don't do good. And let's say some recession or depression hits SoFi, they can go under. It's a possibility. Is it probable? I mean, is it likely? I don't think so. Um, but I'm not going to be one of these investors that's in denial, that thinks there's no way this or that, like they're perma bulls or what have you. But we got to get to the realities. I mean, just last year we saw a few banks go under, and all their investors got wiped out. As much as I'd like to say that SoFi is special, which it is a special investment investment opportunity to invest in a company, but they have weaknesses just as well as everybody else, just like every other bank. In a depression or a recessionary outlook, a bunch of people could be losing their jobs, um, and SoFi can get in some sort of pinch, get caught up in some pinch with some loans and that can't be repaid and loan losses and so forth. And it's possible, looking at their balance sheet, when and hey, I got a stake in SoFi, as you know, so I mean it's a possibility. SoFi could go under. I don't think it's likely, but whenever I invest into these equities and these stocks, I always assume, I have to be real about the risks, and I just tell myself, yeah, I could lose all my money and just get wiped out. Yep. So that's the bear case. So let's get into the. I don't think that's going to happen, or if I thought it was going to happen, I wouldn't have put my capital into it, right? So let's get into the base case. All right. So this is going off of management's guidance, and from a conservative point of view, let me go back to the Seeking Alpha. So you see their total revenues. I just went off their latest trailing 12-month or their last reported annual revenues, which they just closed out 2023 Q4 with. So I put that into my projections going out, and that's where we start. And what I like to do with my price targets is, because I'm a long-term investor. Yeah, quick disclosure: these are 5-year out price targets of what I'm actually seeing and expecting. Okay, so take it for what it is. This is how I invest as a long-term investor. Hopefully, you gain some value from that perspective. If you don't agree with it, hey, you don't have to agree with it. Everybody's got their own investment style and what brings value to them and how they see value. All right. So when it comes to my price targets, I like to go off revenue and net income, and this is especially for growth companies. I use this model. Um, in different aspects, free cash flows come into play, but not in this case. Okay, I'm going off nothing but revenues, net income, and projected PE multiples, and so forth. So we'll see. So 2023, like I said, that was their latest reported revenue to end out the 2023 year. um, Noto's long-term vision going out to 2026 is between 20 to 25% compounded annual revenue growth. On my base case, I'm just going to go conservative, and I've been saying this before for a long time. If you've been following my channel, they're the rate cuts, the Fed rate cuts. I don't think they're coming until Q4 of this year. All right, a lot of the other, in fact, the whole market thought there was going to be a cut in March, in Q1 or so. And I've been saying this even from last year. I think the Fed's not going to cut until Q4. I think pretty much a lot of the stock market disagrees with me for now, but hey, it is what it is, you know. I hope I'm wrong. I hope they start cutting rates. Believe me, I'd like to be wrong, but I mean, just for my forecast as an investor, this is just how I see things in the macro. All right. So with that being said, that's why I'm going to gig 5%, and I'm going to say SoFi is going to do 20% on their lower end of the guidance for 2024 on my base case. So, and then from there on out, I just increased the next year to 2025 is 21%, 2026 is 22%, 2027 is 23%, and 2028, which is a fifth year out, is 24%. So we don't hit that 25% compounded annual growth for their revenues. But this is my base case, remember. So we'll get into the bull case after this. Now, listening to all the guidance and the strategic outlook from Noto and management, Noto says their long-term net income margin goal is 20%. So I'm gonna calculate that to get my EPS, and to see how much EPS we can get on these shares, and I'm going to assume a dilution rate for their shares outstanding. All right. So in their guidance, when Noto said that their long-term guidance is 20% net income margin, he didn't put a date on that. But I'm going to say, you know what? This is 5 years later. I think that they're barely profitable now. So I'm thinking, they should be able to hit this goal in 20 or the 5 more years from now. I don't see why not, or get close to it or on their way to it. So we'll see that over several years manifest. So 5 years is a good grip of time to get to this net income margin target. All right. So with that being said, let's say it's not 20%. Let's say at the time we're at 18% net income margin. That would put revenues a little over a billion. All right, and would be with shares outstanding. We'll put our EPS to 63 cents a share. I'm thinking this highlighted portion on my price targets, this is in a market that's not giving SoFi much credit. There's some sort of depressed bad market to where multiple expansions are not happening. So I'm thinking like this is kind of realistically more of a bear case. I'm thinking worst case scenario on my base case, or the bear side of the base case. I just probably double my money. My cost base is about $8.50 a share ish. So yep, those are my there's the PEs assigned. Um Given, and yes, this is a market that's not really giving growth rates the credit on the peg and so forth. How did I get to shares outstanding? All right, we'll go back to the statement. All right, go down to diluted weighted shares outstanding, but I'm going to go off the last quarterly report. The annualized report didn't update reflected current yet, but as you can see, when we go down quarterly, you have your basic weighted average shares outstanding and you have your diluted weighted average shares outstanding. What's the difference, you ask? So the basic weighted average shares outstanding is what's out there right now. Okay. Diluted weighted average shares take under consideration any derivative options, warrants, or anything of the nature that have not been vested or issued out yet. Excuse me, out into the actual float. So I'm using diluted weighted shares outstanding because going out 5 years, warrants are going to get called. Any derivative options are going to get called out there. What have you. So currently it's 1,029.3. I went off the last average dilution rate of the past year, and I came up with about 9%. Okay, so came out with about 9%, and I did the calculations down here. 9% compounded annual growth rate of dilution for their shares outstanding. That puts me at 1,583.70. That's about a 65% dilution rate. Um, I think that that could that's just what I'm projecting out to see what shares outstanding can happen. I'm not sure, and this doesn't take under consideration acquisitions or anything in the nature. All right, and that could change the investment thesis going forward. So that's something to consider. But anyway, we got our shares outstanding and our net income of 18% net income margin. So it comes out to 63 cents for EPS. There's our price targets. 20% net income margin, which I think they'll probably hit it by then. That gives us an EPS of 70 cents per share. And if they got 20% net income margin, we'll get a little more expansion on the PE credit for the margin. All right. So, hey, base case, we're looking good. All right. Those are the price targets here for 35, 40, and 45 PE. Okay. Let's get to the fun part. All right. Let's say that long term, and then let's say that Noto is sandbagging, which I think could be a very realistic reality when it comes to the long term, long range guidance. All right. So let's say in the bull case, they do 25% compounded annual growth moving forward. Maybe one year it's 23%, another year it's 28%, whatever. But at the end of the day, after 5 years, it comes out to 25% compounded annual growth. All right. We get down to their revenues are going over, it was about 6.3 billion. And let's say they hit their 20% net income margin guidance, and let's say with the shares outstanding, because we're profitable and management has to be cognizant of their EPS guidance, they slow issuance of shares, all right, due to their profitability, which happens, all right. And dilution only comes out to 50%, all right. So there's the shares outstanding. That gives us EPS of 82 cents. And part of these PE what makes me think that SoFi can get a high PE like this. I think that with the expansion of their tech platforms and their portions of revenue, I think they should be able to get a tech multiple, all right, with their gross margin being up there and so forth, and their growth rates. So they should be able to command these PEs. All right, that's how I get these multiples, and they're higher PE multiples because they're growing faster, right? They got higher growth rates, all right? So 40, 45 PE and 50 PE. So you can see we're in the 35 to $40 range right there, just on, and I think that this is a possibility, a legitimate, realistic probability that this could happen. All right. I probably wouldn't even put it in my scenario of my bull case for their price target projections if I didn't think it was attainable. All right, but this is reasonable. I mean, I don't guidance from management is something to consider. I mean, they've never steered the investors or the market wrong. They've hit their numbers before, so something to consider. 23% net income margin. Well, how did I get there? We'll go back. I'm going to go to peers, or let me see here. I'm sorry. We'll go to profitability. As you can see, our sector median is 23.53%. That's the sector median. I'm just going off sector median as part of my bull case of probability and to see if it may be possible. I think it is possible. They can overshoot their own guidance and go to 23%, but I think it is a little more probably. I'll admit I think it's a little bit reaching, but who knows? Maybe it comes out to 21%. Who knows? All right. Nothing's perfect. I can't tell the future. All right. So, but that's how I got to a 23% net income margin. This is the permable. These are more of the permable targets. We're doing 94 cents. We're doing $1 EPS by then. But as you can see, I mean, if we're up to 50 plus dollars, these are exponential gains. All right. So stock's about what, $8 ish, hovering around there right now. So hey, what is that, like a 5, 6x or whatever? So hey, 7x near, depending on whatever y'all's averages are. This is just what my calculations are. Where do I really think that this is going to come in? Where do I think we're going to really land? Well, I think we're probably going to land more so between right here with the on my base case, the upper range of my base case, and maybe the middle range over here. I think that's where we're gonna land. So that's my take on it. I hope you all got value out of it. I hope you all got value out of the video, is what I meant to say. So, hey, just barely set up my Patreon. So, be sure to subscribe to that. Check that out. I'm putting content on there. So, something to consider. But yeah, these are my price targets for SoFi. I hope you all got value. I hope you all enjoy the rest of y'all's weekend. Have a good day.